Again, and this is Observations with Otsu. Thanks for joining. It's been a couple of weeks since I've done this, and I'm getting back into the regular swing of things. I've had a lot of busy things going on in real life. If you followed me, whether on Twitter or Telegram or wherever, I'm going on a very big trip actually. Going to be just going around the world for about 2 months, and it's something that's been in the plans for a long time, and a lot of pandemic-related things prevent us from doing that. And now we're able to do it. So I'm still going to be here. I'm still going to be online. I'm still going to be doing things, but I'm just going to be traveling while I'm doing it. And I'm just getting some stuff prepared. So there's a transition period where I'm kind of having a little bit of slowdown with my content, and that's okay. I'm going to do a brief rundown of what my content is going to look like, and then we'll go straight into the observations video. So first things first, we're going to continue doing the observations with Otsu videos. Those are going to be typically on Mondays. Today is Wednesday for me, so it's going to be more on Wednesday or Monday mornings to get kind of the weekly perspective, so to speak, and that's basically going to be unchanged. My videos have typically been pretty long, about 40 minutes, 50 minutes. I'm going to try to reduce that by at least half because I'm trying to just cut down. One, get used to talking on the videos, but two, I know it's really hard to just focus on a video for 50 minutes, so I need to explain that better. So I'm trying to get it trimmed down to about 15 minutes, and so that'll be on Mondays. Probably Tuesdays, I think. Tuesdays or Thursdays, I'm going to do a small cap series. That's going to be kind of a limited series, probably for about 3 months or so. About one video, one 10 to 15 minute video per week for about 3 months. And that's going to be about small caps in general. And it's going to be various things focusing on how to find small caps, how to research them yourselves, how to look at the difference between kind of a scam small cap versus a legitimate one, how to find gems. There's a lot of people that do this. There's a lot of people online that have no business talking about these small caps necessarily, or they do talk about them, and we can even go into, is there any ethical implications by that? If someone has 200,000, 300,000 followers, should they be talking about small caps so often? Knowing that they're probably driving the price up themselves, it becomes a self-fulfilling prophecy. So I'm kind of go into that. I've only got about 10,000 followers, so I'm still a little bit of a small fry. But the way that I'm going to talk about this, I'm not just going to give you signals, right? Like this, I might end up coming up with a small cap service, maybe, but that's probably going to be free. I'm not really. The point is not to spoon feed you those things, right? It's to, I've always taken the approach to give you the tools necessary to do things yourself. And I know that that's the path that's not traveled as often. I know that that's not something that people enjoy. People want to be spoon-fed. People want to get rich quick kind of aspect. I don't just do that, okay? For numerous reasons. And most of the time that's an easy way to get scammed, and I'm not there for that. I'm not there to do that to you. I'm really just here to share my thoughts, okay? And when I first started my Twitter account, it's because I wanted to get into the crypto space. After about 2 years, I noticed that people wanted to hear what I had to say, so I kept saying what I wanted to say, and people kept enjoying that, and that's why I'm here. I don't have the 300,000 followers that people have. Sometimes I wish I did. Sometimes I'm glad I don't. It doesn't really matter to me. But people continuously want to hear what I have to say, so that's currently what people want me to talk about is small cap stuff. So I'm gonna go into that. There's a lot of ugliness about it. I'm gonna talk about that too. So that's a limited run for now. We'll see if I have enough. I'm not sure if I have enough long-term content for that, but we'll play into that. Another thing is, I think a lot of people liked my altcoin Gauntlet series from my Apex Academy, which was a paid group. And if you are interested in that, I do have the courses for sale. I can offer that to you in the description if I can remember. But that's not something I'm necessarily trying to sell either. So, but anyway, there was a video series on Wednesdays that covered altcoins, and I went through altcoins very fast, and people enjoyed that. That was probably one of the most people enjoyed. and so that's probably going to be on the list as well. There's going to be more videos talking about different trading education. That's a thing that I think a lot of people have, a lot of accounts have neglected to talk about, and a lot of things that people want. I did a Google form. That's the Google form is mainly for my bot service that's coming up, and if you are interested, I'll put the form down below in the description for this video. But one question on there was, what do you think accounts should do differently? What's one thing that you think I should do to help you be a better trader? But also, what are some things that big accounts do that they shouldn't do? And so basically the general aspect was keep things short and simple. Don't try to be scammy or spammy. Just be authentic, basically. And then the other thing was give me, like, from normal people, from normal traders and all that, people just want education. People will just want to explain to them in a simple way that they can be a better trader tomorrow. And, and not necessarily like a massive, awesome trader tomorrow, just like one step at a time, right? Like, and that's my approach personally. Like, I want to be, what can I do that'll give me one step ahead tomorrow, the next day, the next day, the next day. And that's one reason I've progressed so much in my journey of being broke, having my son in my arms with no money in my hand, no idea how I'm going to make things work with all the predatory financial systems in place and the world's against you kind of thing. And it's I don't want to dramatize that necessarily, but there are aspects to where that is true. And so you have the deck stacked against you. So how can you make it work in your favor? And so a lot of you guys want me to talk about my personal journey as well. So that's probably going to come up. So over the course of the next 2 to 3 weeks, I'm going to quantify that in videos, and I'll explain that. So I'm already talking too long about that. So that's the rundown. I'm in basically a transition period between all the videos and the traveling, and so I'm going to get that sorted. My main focus for all my content is the bots, because that's been what you guys have wanted the most. That's probably the easiest to set up. It's almost complete. It's actually in a beta stage. I'm actively getting signals. I had to tweak some of those signals yesterday. As of this morning, they are working exactly how I want them to work. So if they continue to work for the next 2 days, I'm probably going to launch it officially on Monday. I'm probably going to send invites out possibly Friday over the weekend and get it all officially integrated on Monday. So we will see how that goes. But as far as this, we'll get started with the video. All right, now, as all observations with Otsu videos go, we're going to look at the total market cap first, spend 2 or 3 minutes on that. Then we're going to go into the Bitcoin chart. I think in the past couple videos, I've been adding the Bitcoin dominance chart. I think I'm going to briefly cover that with the total chart. So it'll be total and dominance chart for about 3 minutes or so. Bitcoin chart after that, go to Ethereum, and then we'll cover a few different ones. I think we'll cover Solana and a few other ones, and so usually we cover about 5 total. So we'll just go ahead and get started with that. All right, so first things first, we're going to go to the total market cap, and it is right here. Typically with our observations videos, we cover through the weekly, but we usually cover this on Mondays, so that's a little so usually we cover what we want to expect to happen this week, but the week's already halfway over. So we have to play into that. So as you can see, we had a pretty big drawdown of a week previously. Had a little bit of pump, but now we're still kind of continuing down. But honestly, in the grand scheme of things for the weekly, this has been a pretty boring week. And this is something that I've kind of stressed to my followers a little bit, not quite a lot, because I haven't really I haven't been active the past few days, and this is one of the reasons why there's nothing really to comment on as far as what's going on here. We had the bullish engulfing here, then we have a slow bleed down, but we're still within this range, right? And here's that little range. If you just count the bodies, not the wicks, this is what we're looking at. We're still within this range. There's nothing really to see here, honestly. And this is something, really the only comment I have on this is like, and I mentioned this in my private Discord today. um, you there's just there's nothing to do. Go do something else, right? And I don't mean that in a bad way. I just mean that is like set your alerts, and I'm a big fan of this. Set your alerts. Find two different scenarios that's going to break this, right? Which is probably going to be a break down below or a break above, and then just set your alerts and just wait for those alerts to set, and then go outside, go do something with your family, go, do whatever, right? Like I think a crypto Twitter in general, and I used to be guilty of this, and I still am from time to time, is people spend too much time on the charts. I'm a much bigger fan of quantifying what you're able to look at, set alerts, create scripts, whatever you need to do to minimize your time on the charts. The option, you maximizing your time is not going to make you a better trader. Most traders that I know that are successful know exactly whether it doesn't really matter how much time they've spent. Most good traders I know exactly what they look for and they execute. Okay, that's how they operate. And it doesn't matter if they spend too little time or too much time. For me, it makes sense to take that application, what all those profitable traders do, find exactly what you're looking for, but then I take it one step forward and I set those alerts and I forget about it. And if none of those alerts pop up, that means your scenario did not pop up as well. And so if it doesn't pop up, you're wasting your time, right? So a good example is if I'm setting an alert for a candle to close either above here or below here, I haven't gotten a signal for 3 weeks. And so I'm not in, like I've done very little main trades the past 3 weeks. I've done small cap trades mainly because that's where the action is, and those aren't even that healthy this past week. We look at like the daily chart here. I mean, we got a slow bleed, right? And so that's good if you're bearish, so to speak, but that's not really a good R&R to kind of work with it. And so for me, I'm focusing on the long term. We already got the reclaim. Let's go to the 2-week chart. We got this reclaim that I was looking for. This was based off of my liquidity script as well. I got the buy signal. I bought in around here, and we pumped up. So as long as we stay above here, I'm bullish. I have no reason, even if we drop down halfway down here, I'm still bullish on this because the macro is. I mean, and the bear market is very likely to be over. And I won't get into that because I know a lot of people disagree with that, and that's completely fine. But as far as this goes, like we're just at a really big range right here for pretty much the past month. And so that is why it's boring. But it's designed to be boring so that way you get agitated about yourself and how you're not making money, and then you try to make money and then you actually lose money, and then now that you lost money, you try to make more money again, and then you lose more money again. And so it's a process, right? It's designed to warp you into losing your money. Any type of trading at all is designed to make you lose money. Okay, and that's why a lot of you guys should focus on high time frames. I've been very, very vocal about that because most of you should not be trading at all. Honestly, if I'm being honest, I can't tell anybody what to do because that's financial advice. So I'm not telling anybody what to do or anything like that. The point is that 99% of you cannot trade. And there's no continuation after that sentence. 99% of you cannot trade. A lot of even big accounts don't trade well. They don't trade at all. I know some that don't trade at all. I know some that make 80% of their money not trading. They make it off of marketing. Okay? And so I'm not necessarily calling them out, or not. It's not like that, right? The thing is that you guys look at these big accounts because you think they know what they're doing because they have the numbers following them that think they know what they're doing as well. But nobody knows anything. You had FTX and Alameda, one of the biggest companies in the crypto world last year, collapse. There's a reason for that. We can go into the details of why that it was. But the point is, like, even the top dogs in the entire ecosystem have crumbled instantly. So don't think that you're not. Don't think that you're worse or better or worse than some hotshot account. Don't think that you're better or worse than me. Even I gotta reflect on myself every week that I trade. because you're always one bad trade away from screwing yourself over in some way. And so, anyway, I kind of digress from that. But the point is that in the past 4 weeks, we've just been in this chop situation. Actually, this is, I'm sorry, I thought this was a 1 week chart. This is 2 week chart. So this past 8 weeks, we've been stuck in this little range here. And that's exactly why a lot of you feel bored and you don't want to trade. It's designed to do that. And honestly, the best thing is to sit on your hands. Absolutely. Okay. I know people that have accounts that want to try to have some sort of fireworks signals and all that, and yeah, you can still trade this. I'm not saying you can't, obviously, and it depends on the time frame, right? But overall, the majority of people cannot trade in general, and therefore, if you do want to trade, the best place would probably be long-term, high time frame trends. And I got one here. I'm not saying that you should do this, but like, look how easy it is. I'll just turn the long chart on. Log. I hate log, but it's demonstration. So if you would have longed this all the way up to here, you would have made, that's not exactly the number I want to make, but let's say you waited to here, right? So you made over 6x regardless, right? So that's the thing. If you would have traded this here and you would have waited to the cross, you would have lost 21%, right? So let's just take a calculator. And I'm doing this to be kind of stupid on purpose, to say, like, let's just say we had $50,000 and we made let's just say we made 6x. Let's be conservative about it, right? So you made 6x, so that's $300,000. You go ahead and add your original investment of $50,000. And so now I got $350,000 already. And then let's say we lost that 21,000. Let's say we just lost 20,000. And so we'll times that by 0.8. And so now we have 280,000. And now you had this here. So now, actually, we'll keep this. I just realized that if you guys are doing a 2 week chart, you're probably not doing shorts. You might be doing perps, but a lot of people don't do perps on these levels. I don't recommend doing perps on shorts anyway. So let's say you had the 350,000. You didn't short this. You just cashed it out there, and then you tried to long this, and then you end up losing, 13. Let's just say 14%. So it's was it like 84? You have 84% left. So you're at 294,000. You got out here. So the thing is, you're still at $294,000 right here, which is divided from your initial investment is 5.8x. So you made 5.8x in the past 3 years basically. Did you make that much money, by the way, trading? So that I keep mentioning that, right? If you started right here at the pandemic, do you have 6 times what you used to have right now? And if the answer is no, you need to do this instead, probably, or at least consider it, because that's where you're going to start making more money. And so, yes, you see something like this. It's not easy to lose 40% of your stack right here, right? But you would have made that up here, and you can take things out as you go. I'm not saying you should do it from MA to MA as well, because it went all the way up to 900. I can tell you, if I would have went to 1,000, I probably would have cashed that out, because a 10x is just a good number anyway. So it depends on your investment, things like that. So I don't want you to hold anything longer than you'd want to. But what I am saying is, you could have made basically 6x in the past 3 years, and you very likely did not, and that's okay. That's okay. But I'm saying that to give you a different perspective, right? Like, sometimes, honestly, in most cases, the high time frame trades are better. They really are. And so this is something that I'm looking for, honestly. I wonder, can I don't know if I can set that alert. I kind of want to, actually. I'll figure that out later. So anyway, but right here, this is something good to look at. Is the EMA 21 is typically a good indicator of what to look for. We're kind of hovering at that as well, so something to consider. Overall, not a lot going on. We can cover the dominance chart as well, and you can kind of see all the stuff going on with the dominance chart. Is we're kind of still in this range. I've had this range. This was from my private Discord that I mentioned. We're stuck in this range until otherwise. I think we need to focus on Bitcoin on this regard. We have kind of this consolidation period back then. That was the end of that was the beginning of the bull run, or I guess the end of the bear market from 2018, right? So we're kind of seeing that here as well. If we can break above here, I think that's officially the end of the bear market. Is basically what I would be saying. This looks like a very huge Adam and Eve chart. This looks like a very big Adam and Eve pattern. So you got the Adam, you got the Eve coming up, formating or being built. Sorry. So I think we can look to see something like this up here. I think once we get that Adam and Eve structure, I think that would be the end of the bull market, though. Unfortunately, that's just how it works. Once the dominance rises up, that's typically the end of the bull market. We had that here. That was a good sign. We had it here at from the, this was the previous bull market. This was the market that I started in, right? So like that's what this looked like when I started, right? And so it looked like this. So much different perspective now. So give you an idea, but that's just the dominance chart, total market cap. Basically, a lot of chop going on. I think majority of you should just honestly sit on your hands, and that's just the hardest thing to do. It's the simplest thing to do, and it's the hardest thing to do. And I cannot tell you how much emphasis you should do that. And I if there's one secret that I could tell you about me about trading, is the fact that I trade very little. I trade very little, and there's reasons for that. Reasons are I look for a place to find profit, to find an opportunity. If I am hunting, okay, like I come from a big deer hunting family, right? It would not be helpful if you go hunting where you're just shooting hundreds of bullets at a time. Okay, first of all, you can't do that. It's illegal in the state that I'm in. But also, too, when you're looking for, you don't just spray and pray, so to speak. You don't go out there with a machine gun trying to get a deer, because first of all, you're going to scare all the deer away before you even find one. Second of all, if you do find one and you shoot it up, you're not even going to be able to eat it, right? And I'm sorry if you don't eat deer, or you might be a vegan or whatever, but it's a very more simplistic process. You go out there with a rifle, you wait for your shot, you wait for it, and then once you get it, you capitalize on it, and you have to hit it at a right spot, because if you hit it in a weird spot, then you're going to not be able to savor the processing for the meat and all that stuff. But sometimes if you shoot it wrong, it runs away and you don't get it. So there's a lot of strategy in that, right? Like, you got to be careful. It's that sniper mentality, right? Like, you got to wait for your shot. Same with playing hockey or something like that. You got to wait for your shot, or football, whatever sport you like, So it plays into that, right? Like, you would be shocked, and I'm setting up my advanced journaling portfolio as well. And one thing that you guys might notice is when I do that is how little I actually trade. I prefer, instead of doing like 100 trades a month, I used to do like 100 trades a month. And for some people, that's actually small. I know people that do 300 a month. But I mean, nowadays I probably do like 20 a month. And that's for numerous reasons. One, I know exactly what I'm looking for, and if I don't get it, I don't trade it. And two, when I do find what I'm looking for, I add size to that. So instead of doing one risk percentage, I'll do 2 or 3 or even 5. Sometimes I do 10. So it just depends on that, right? So I want you to keep that in mind, because most of your most successful traders in this space, if they're trading actively, they've done it for so long, they're just used to it, right? But most of your wins will probably come from higher time frame trades, more than you think, right? That's where some of these people will trade high time frame. They'll hold Solana. I've seen people hold Solana from last cycle, made a bunch of money, things like that. So I digress from that. But basically, this is why we're not seeing anything concrete. We're waiting for a consolidation period until we get another expansion. And we'll go over Bitcoin and see if that's to the upside or the downside. All right, so we're going to go to Bitcoin. I knew I would talk longer than I should have, and I need to stop doing that. So going to the weekly. So 2-week chart, we have the same consolidation period that I talked about. 1-week chart, we're going back down to the 21 EMA. That's not exactly what I wanted to look at, but that's very reminiscent of the 200 EMA on the daily chart. But we also have the 200 as a resistance here as well. So I'm more of an EMA person right now because we are starting to form a trend. And so I'm less concerned about price action, and I'm more concerned about trends. And that's another thing about waiting for a move. A lot of you guys are looking at price action. I see a lot of big accounts currently looking at price action, and they're dumbfounded. They're frustrated. They're bored. And it's like we had this bullish engulfing here, but it just faded. And it just goes to show you that the price action isn't really valid at this point. The trend is more of a concern to me. We have the bearish consolidation here for the A-Rune, which makes me think that we are going to slow bleed first. And this is one reason why I look at A-Rune more than I look at price action. Because price action can lie to you. It lies to you very often, right? Excuse me. So, I mean, we did have this in bullish engulfing, but we had this drop down here, and it turned into a consolidation. We had the fake out, and now we're in a bearish consolidation period. And now this is at the 82% mark, so I think this could accelerate pretty soon. I think time will tell, obviously, what this shows, but right now, again, we're in this range. As long as we're in this range, I'm not concerned about a move. I have this marked out here at 21.7. That's where I would like to see us have something. I do think we might go down to 21.3, and that is actually the low of this candle right here. Let me try to zoom this in. It's hard to do on a weekly, but so this red line right here, that's kind of what I want to see. That this second line on the bottom, I think that we'll touch the lows, and then I think we'll continue higher. This is a very complex structure, but overall, this isn't something that you should necessarily put too much attention to, because at the end of the day, this is just a consolidation period, exactly like this. All right, so we had the drawdown, we had the consolidation period. Everybody thought it was going to go up, and then went down again. I can almost guarantee you that we're going to get the inverse of this, right? We're going to go down, make a new low. Everybody's like, oh my gosh, we're going to 15,000 again, and we're going to rip higher. And we can see this if we do an invert and see how this kind of did the same thing pretty much. And, you know, I hate inverse charts, honestly, but this kind of gives you a decent perspective on what we're looking for. Had the drawdown. We're probably going to get this upward move, which is actually a downward move, and then we're going to go back down, which is up. So that's what I am seeing with that. I think that makes sense to me, and I think that's why we're seeing a lot of frustrations, because the market is trying to decide its next macro move, and a lot of people are thinking that we're going to go down back to new lows, and we might. I'm not saying that we can't. I'm waiting for that in case we do. But overall, a lot of stuff still points that we are still consolidating for a bullish move. And this is kind of what we see here. This is my A-Rune trend pattern. When you see a squeeze like this, when it starts to squeeze, it usually means that we touch the bands. And we just did. So we just started touching the bands. Sometimes we touch the bottom, which is like 21,000. So that's completely possible. But as long as we hold this blue, I'm not concerned. Not concerned at all. So on the daily, we can see that we're right at the 200 EMA on the daily. I don't really see any reason why we would go down for now. We also have this consolidation period as well. I think I'm gonna just change this because that signal keeps getting in the way. All right, so and get rid of all this. So this is what we got. We got this miniature consolidation period here. So we have that in confluence with the EMA. We also have this here. So we have a lot to go through before we really go down. That's why I'm not concerned that we're going to get a big bearish break. A lot of people are freaking out about this, like, oh, it's going to go down like be patient. We still got a lot of stuff to go through. We got a lot of consolidation periods. Usually it doesn't rip down straight away. We've had a lot of bearish news. And honestly, considering all the bearish news that we've had, we haven't really done much in the past week, honestly. So if you go down to current, that's only like 2% from the past 5 to 6 days. We're doing fine. Yeah, we had this drop down, but I get so pissed, honestly, when we get a candle like this. Like, people think the dang world's gonna end. Okay, like, it's not. This is structurally part of this. Even big moves like these are all part of the show. They are. Even something like this. A lot of this was a shocker to some people, and I don't think so. We had a perfectly structured region here. This was the FTX. This was the FOMC fake out that everybody freaked out on, and this was the run up. Okay, like, this was completely. There was nothing completely unusual about that. This should not have happened, and this should not have happened. And this is what happens when people freak out about these meetings. You get a blow off top, okay? That didn't amount to nothing. Everybody thought this was over, and then all of a sudden it just bursted out. And now we're above this FTX scenario, and that's the thing. This is going to be a key for me. 21.2, 21.3. This is exactly where I think we were going to bounce from, because this is the overthrow from here, but also the FTX retest point, so to speak. So that's what you guys got to keep in mind. Like, these things have reasons for why they do it. I honestly, I know I'm in the very rare minority on this, but news is a distraction. It is. If you just focus on what the charts can say, it'll tell you more than likely what's going to happen. And so we had this consolidation period. Everybody thought we were going to go down. This was just a retest point. And so it was basically the mid of this range, right? So we broke above. This was a retest of this. We had a bullish engulfing, which usually retests, but we also had a divergence. So it all played out. Here we had a divergence. We also had a 2-week divergence on this. I told so many people about this. And now they got all pissy with me about it, and now they're not pissed anymore, but now they're wanting new lows, and time will tell. Like, I'm not saying we ain't going to get it, but we have a lot of stuff, and this red day doesn't scare me. Like, some of this stuff, Bitcoin's only down not even 1% for the day. Like, this is really silly to be so dramatic about this, right? And even things like fetch, like, right, is that the highest for the day? Like, we got ape short. So the highest is basically the AI coins, but guess what? They went up freaking 400%, right? So it was 600%. So yeah, 11% is going to be normal for a drop. So I even have this marked out. This is where I think that we're going to bounce towards. So this isn't like 11% drop for the day on an AI coin like fetch is normal. It is, especially when you have something like this going on. So it's much better than the small cap coins that people are shilling you, and they're going down 50% in a day. Where that's not normal. That's accounts selling your bags that you bought. So and they're cashing it for them. So, and again, the top two are AI coins. DYDX. I don't really know much about this, actually. I mean, I know about the coin, but I haven't looked at this too much. So, and so that's worth noting. But you're always going to have good or bad coins performances on a day to day. But these are AI coins, right? So nothing much to see here. I think people are overreacting as usual. People overreact all the time, and your main edge that you're going to have is being surrounded by the idea that you are not going to overreact to things. You need to have calm resolution, set out different strategies, and focus on that. So